Hi, I'm Jim Gordon, and you're watching Market 1 Minute. Joining us is Scott Burton, CEO of FansUnite Entertainment. Scott, welcome.
Thank you. Thanks for having us.
Great to have you, sir. Okay, tell us about FansUnite and which global markets the company is looking to expand into.
Yeah, so FansUnite is a global online gambling company. So we do traditional sports betting, we do iGaming, which is known as online casinos, and eSports betting. We recently announced a deal where we went into the European market with a Malta license that we obtained, and that was a sports book called Moneyline Sports. Just did another release where we're going to be using our UK license, so the UK market with a Welsh bookmaker called DragonBet. But really this year, FansUnite will be focused on the US market. It's the fastest growing regulated market in the world, so plan to make some big moves in that space this year.
And what's been the most impactful aspect of your acquisition of American Affiliate in late 2021?
The one that people will see right away, that's visible to everyone, is definitely the revenue. So we acquired that late 2021, heading into a very busy sports season, especially for sports betting. You had the Super Bowl, then you had March Madness. So top line revenue is the number one headline from that acquisition that people will see. I think what people haven't seen yet, but will, is the business development opportunities that have come with it. So we have an executive team at American Affiliate that's very well connected. They also already have agreements with all the major sports books and casinos in the US. So for our B2B business, which is in the business of providing software and platforms to operators, the opening of doors has been very good for that acquisition.
Scott, give me your thoughts on Ontario recently opening up to outside operators for online sports betting.
Yeah, I think there's been, I guess, some positives and negatives for the industry. Positive is that we're starting to see governments open up, like Ontario, to outside operators, which we encourage. The challenges of being that we still have this very large gray market in sports betting in Canada, which hasn't been addressed, which is going to make it difficult for operators who are going to follow the rules in that. So that's a challenge, and that's kind of how we've looked at that market. It's been very busy opening. I would say from all reports, it's been pretty successful, so they've done a pretty good job. There's some of those other areas around the advertising and things that are still going to come and get better once they get through the growing pains of the initial opening.
Sure.
For us, we looked at the market and we look at it similar to the US, where FansUnite is not going to be a direct-to-consumer operator in that market. We did go secure a supplier license, so we are looking for partners to go in as a software supplier in the province.
And what can investors expect to see from the company throughout the rest of the year?
Yeah, I think the first one is the revenue growth we've seen. So, we showed our financials for 2021 when we did just over $5 million in revenue. Significant increase in Q1, so we're over $9.5 million in revenue in Q1. A very important part of that is we, first time ever in our history, been cash flow positives. So I think you'll see continued strength on the revenue side of things from the company. Really what we're focused on now, though, is commercializing our software. So we spent a lot of time in the past years on the technology front, building infrastructure, getting all of the things in place we need to take on a global betting market. And some of these conversations we've been having, they do take months to come to fruition. So we will start to see those this year. We saw one in January launch. We announced another deal coming, and we have more, especially focused on the US. So I think the B2B growth will be the one that'll be, I think, most impressive for the investors.
Finally, how is FansUnite positioning itself for the changing investment environment?
Yeah, it's not been an easy one in the last, say, 6-9 months, as everyone knows. We're not immune to that. And what we were able to do was we financed, I think, at a good time in 2021. So if people recall, we did quite a significant financing, put ourselves in a good cash position. The acquisition came at a good time as well. It was during the decline, but we got that in the end of 2021 before the big revenue ramp up. So we're in a position now where we're debt-free. We have plenty of cash on the balance sheet, rising revenue. We will be, preserving cash to make sure we extend the runway if needed. But the nice thing, I think, for investors is we have those things. So we have cash, rising revenue, and we're not going to need to go to the market anytime soon. So I think that's what investors need to look at, is which companies are going to come out the other side of this, and we're definitely one.
Scott, thanks for joining us.
Yeah, thanks for having me.
Hi, I'm Jim Gordon. Thanks for watching this Market 1 Minute on YouTube. If you want to keep up to date with other videos that we're putting out, you can click subscribe just below me or click on this list to see other great videos from Market 1. And thank you again for watching.